The ASX has turned up after 8 weeks of consolidation, although in comparison to the NASDAQ, that tech-heavy index, it's well and truly behind. The question is whether we'll see a rotation of new leaders coming to the lead and taking up market dominance. Gary Glover's taking us through the update in his weekly report and telling us where to look for trades and the market indices themselves. Good morning, Gary. How are you?
Yeah, I'm good, Chris. Yeah, no, that is probably the most interesting aspect, is that the XJO has had that 8-week congestion sort of pullback, and now looks like it's actually if you look at that 8-week sideways period there, I think our index has only had 2 days in a row up for that whole 8 weeks. Didn't have 3 days. I don't think there was 3 days in a row of going up. So we've just gone 5 days up in a row now. I think we've just had a really nice burst out of the range here. We've gone above the swing high. We've gone out of the channel. What's more impressive is really some pretty strong volume has come into the market here the last week. So I've seen resources which have bounced out of that May low. Interesting little fact, there was I think I tweeted this maybe 6 to 9 months ago now, that the October low for markets, the commodities found their low 7 months later, which was actually the end of May in 2003. So interesting here that commodities, BHP, Rio, Fortescue have all sort of fallen into that end of May. I think it might be even the 1st of June might be the low, but exactly 7 months later than the equities market low. And that was the point where they rallied last time. So that was from May, June 2003. That was when our market found a low and actually moved higher here. So some timing here for our market move. Again, it's probably got to look at our use our eyes rather than our ears. Let the tape tell us what's going on. Some of the good phrases there, but the tape is basically sort of quite bullish here for our market now, breaking out of that range. Some pretty strong volume there, and there's some good volume in the banks and the resources here, Chris, which is simultaneously sort of showing some strength there, which is we haven't seen for quite a while. So
that's really when our market does its best, isn't it? When financial and commodities line up. Yeah,
so it's interesting. Both those sectors have had a bit of a pullback, and then they both have burst out of the low here on pretty good volume here. So some good signs there for our index.
So that's good on the Aussie. So we've jumped straight into that, as you pointed. Sort of the timing 20 years ago, very similar with the commodities leading and running, and the banks, the financials are kicking into gear, the commodities are kicking into gear. We've had consecutive days up. That's a big contrast to the main one that we look at to start off the reports is with the NASDAQ normally, because tech heavy, it's been driving. So a couple of weeks ago, you'd highlighted that cup and handle on the NASDAQ. We've broken out of that, and it seems like it hasn't really looked back. What's the update here on the NASDAQ?
Yeah, no, exactly. So still pretty strong here. I was looking for, we've gone past that, probably the target for the cup and handle pattern, which obviously they can do. So that's obviously a pretty bullish sort of pattern normally. But looking for sort of, possible areas of resistance ahead, I think around 14.2, I think around 14.5 is probably 2 levels to watch here. But at this stage, I know it's looking a little bit of extended there. You probably see a little bit of pullbacks there, but we showed there in those third years that we generally only sort of got 2 to 5% pullback. So I think if we see anything like a 3 or 4% pullback, and in the NASDAQ or the S&P500, there are probably opportunities to add here. So so I think you probably slow down a little bit here. I think it's probably we've had a bit of a burst here, so maybe we'll sort of slow down and maybe just sort of climb on do that sort of slower climb there. Probably easier to show that on the S&P chart. Actually, the next chart there, I sort of highlighted what I was referring to. So when they're sort of in that previous sort of bullish phase there, sort of 21, we did sort of have like an overhead line there, and they can still keep going higher, but we just tended to track those. So those sort of two highlighted areas there is where you sort of might track the the upper band. So you might go 3 or 4 weeks on the band and then maybe cool off and then go again. So there's S&P here. We might track this upper trend line for a bit. Maybe we'll track it for 3 or 4 weeks, maybe have a pullback. I mean, I think July and August are sort of, particularly sort of July would be a good month for a little bit of a pullback, maybe into late July, and then go again. But I still only see them being small pullbacks here, Chris. So yeah, I still think it looks pretty robust to me. I still think we're going to sort of see small corrections there. I'm just pretty confident we'll run into the end of the year here. I think next year might be a little different story here. It might depend on what inflation's doing, but I think in the short to medium term here, I still think the market looks pretty positive.
Well, that's definitely the S&P and the NASDAQ. They've broken out over the overhead resistance. As you're saying, they might run along that overhead resistance line like 2021. As it touches or runs it, has a bit of a pullback, but only expect it to be light. If we look at the Dow, so that's been a little bit different. I want to find it hard to draw an overhead trend line that's going up. So how do you read what's happening here in the Dow?
Looks more like the All Ords, doesn't it, or the XJO, and that we've had that sort of congestion, sort of consolidation, but now starting to sort of burst up. So it's kind of, it looks not too dissimilar to our market, really, XJO. So a bit of a consolidation for a period, but yeah, so that's a market that's sort of struggling to go down here, congesting under the high here. So yeah, we've broken through the top part of that range there, depending on whether you use the closes or the spikes. But yeah, so it looks pretty constructive to me. I mean, it looks pretty positive. It looks like that, the Dow can go back and retest the high here. And I think it's quite possible that our market might go back and retest the high as well, or go near the high anyway. So go up, So I think we go back to 7,500 at least, go up near the high. Yeah, it'll just be interesting to see. But the Dow looks pretty robust as well. So yeah, all looks pretty positive to me.
So if we're looking at those indices, they're looking positive. We want to be looking at the top trading shares, the ones that can provide us the best opportunity. So we move into the trading share part of your report. If we've got mineral resources here, we're looking at that. You've got the famous FB on your chart here, and that seems to be sitting just above this previous high. So how important is the placement of this false break for mineral resources?
Yeah, so it's like used up a bit of time here. So we've sort of had a fairly lengthy decline there, mostly overlapping in nature. Maybe the last little decline did sit under the high, but then it did go to a new low, but that new low didn't last very long. So ended up with a little bit of a false break there, as I've marked there. Two things there is the level sort of come back, just sitting just on top of the old high, which we know sort of old highs become new lows or support zones, and just starting to see a bit of volume here, which just with sort of BHP, Rio, Fortescue sort of bouncing off those lows there. Mineral resources is that's, I'll put that sort of pretty close in the same sort of category as a sort of kind of a quality large cap resource here. So good return on equity there for mineral resources. Still pretty buoyant sector really overall. So yeah, this is a pretty key level here. So this is sort of one that I think if it sort of kicks up out of this range there, could go back and retest that high. And that's still sort of sitting on, all we've done is come back and sit on top of previous highs. So that's pretty constructive longer term. So we know that when trends just still sit on top of old highs, that means they can still go to a new high potentially. So, but yeah, it does look pretty encouraging here.
So we've seen mineral resources have a phenomenal couple of years. The share price is 70 odd, it's been to 90 odd. That's been a great success story in the last couple of years. If we invert that and have a look at something that's had quite a bad couple of years, Magellan has fallen from grace and fallen pretty hard and just continued to draw out. What you've got on the chart here seems to be somewhat constructive, is it? What's happening here?
Yeah, so two things of interest there is obviously we've sort of started to flatline. So basically the downward trend has sort of has stopped. And yeah, started to sort of base there. Just seeing a bit of increase on the volume on the up sort of phases, and then probably a bit lighter on the pullbacks, and then this last sort of rally there was some nice sort of breadth in that last move there, and we've sort of gone kind of broken above that little sort of wedge there, sort of tightening phase here. So just possible sort of constructions there of a bit of a basing pattern there. So it might be a little bit early here. Kind of did maybe think of maybe this might be one for the the end of tax year sort of selling. This might be one that sort of could recover next year. So it might be one of the worst performers for the financial year.
The Dr. Darling category.
Yeah, it could be. I mean, it's had massive outflows, so definitely had a tough time with it here. But yeah, look, it's just difficult. Those sort of managed funds sort of groups there, they can sort of they can get on fire and then have great runs, and then they can cool off. They were seeing a lot of them sort of boom and bust sort of cycles as well. So they're not like a closed fund where that sort of just manages money and goes has the same sort of movements with the market. That these things sort of as the flow of funds comes into their funds, they grow up exponentially, and then the money comes out, they get pummeled as well. So definitely some risk there. But look, the price action is sort of somewhat positive, which is probably the first signs of positive for quite some time here. So that is sort of constructive.
Well, another one in the financial space, but a very different story, is Macquarie. So you've been looking at this for a little while, and you've talked about how it's moved. So we've come down sort of 170, had a bit of a rally, and didn't quite come back to it. What's your take on what the latest movements with Macquarie are?
Yeah, the interesting thing here is that the other banks have all come off pretty hard here. So Westpac, ANZ, NAB, I mean, they've all, like a lot of them have come back to new lows and pretty deep, and come back to, go back to the old sort of single digit PEs, which you occasionally sort of see maybe once a year. The yields, 6.5 to 6.8 for some of those other banks. So some pretty decent multiples if you look at the quant stuff there. But Macquarie actually really has, although it's been a bit of a time correction here, it's held up pretty well. It's actually, we've got that low sort of in mid-year, that sort of, we had a first high low sort of the end of sort of 22, and then since then was sort of March and June here, we've sort of got two high lows here. So actually got that 0, 1, 2, 3 pattern there, Chris. They're really sort of, it's not the typical base here, but what this does show relative strength for the banks here. So this bank here is particularly sort of holding pretty firm here, and it's pretty constructive. Then last thing on the chart there was that we had that little inside week last week, no volume, so the selling dried up, and then pop, it went bang last week, big volume. So that's a pretty good sign here. So again, this looks pretty bullish to me, pretty positive. So can't see anything is that. So that could definitely take out this what's that, about 196 high there. So no reason why that can't be taken out there, maybe get back towards 200 or something. So it does look positive to me.
Well, if we stay in the financial space and look at one that's going back to the troubled side of things, it's not every day you see well, actually, we'll go to Westpac first. I was thinking of another one, but Westpac, if we're going from parallels to Macquarie, you were saying that it's sort of coming down. Macquarie was making higher lows. What we're seeing here on the chart is that it's come down lower than the October lows and going back towards what the March 2022 lows is sort of the next one on the cards. But from a valuation and PE and yield perspective, is that less likely to happen?
Yeah, so we've sort of gotten back to single digit PEs, and then I think the yield was 6.6%. So, being a broker, of 20 years, every time, if I just bought the banks, every time they got down to a yield of 6.5%, I probably would have nailed probably 95 out of the 100 lows for them. It's just be hard to go wrong buying them on that sort of yield historically. Maybe the GFC, but even the GFC actually, I think ANZ got down to around 9.5 times, and I think when it was, I think $17 was sort of, while the GFC was going on, I think the $19 in 09, actually, I think at that stage the wholesale costs had actually improved and the earnings had improved, but the price at $19 was cheaper than at $17. Obviously not cheaper in price, but from a valuation perspective, it was now cheaper because it was in better financial condition. But yeah, just interesting. These banks here have sort of come back to those sort of big historical, really cheap valuations. So that's interesting to me. But then I'm also looking at the technicals here as well, Chris. So we can see here that's a big level of 50%. And it's a big level historically for that stock as well. Plenty of touches around that sort of $20 level as well on the way down here, on the way up previously. So big price zone for me. So I like with the fundamentals and technicals sort of giving us sort of something to look at there, something interesting. And since then we've seen a bit of volume come in, and it has had a bit of a pop here. So we definitely they look quite good here, the banks here. So again, not going to see massive moves here, Chris. We might bounce from say 20 to 24. It's at a 20% move, potentially. Probably a 15% move might be more realistic.
Well, that takes us to the next one on the list, which is ASX, and that's the one I was alluding to before that hasn't been in the best position. They just recently had their investor day, and it's a real indication that the wheels have fallen off when the key message coming out of it is that they've got a 5-year plan to restore trust. So that might be showing on the charts. Is that kind of what we're seeing, the fall here in investor confidence, trust, and competency within ASX?
I mean, the business hasn't changed that much, Chris. So, I mean, we're still, listing fees and transaction fees and the market's reasonably buoyant here. So, I mean, corporate transactions would have been up over the previous years, probably start to sort of cool off here with a little bit of this recent decline here. So, might be slightly more difficult to raise money here, but the essence of the business hasn't changed that much. What's changed here is that they've had an issue trying to, probably got too smart throwing, but they want to do this sort of chess upgrade and go to the what do you call it? What's the crypto
blockchain? The
blockchain, so wanting to sort of get ahead of the curve here, go to blockchain. That was years ago, which was kind of like, so at the time they thought, these guys are ahead of the curve, but haven't made it work. They had a few issues. They had cost blowouts. So now we spend a bit of money, and it's actually not that much. It's not, in terms of the overall side of the business, it's not that compelling a loss for the whole earnings there. It is just a bit of a lack of trust there for the business. So so it's just sort of delayed that. I mean, look, in hindsight there, if they probably had held off and just, look, we're going to investigate blockchain, but we might be something we look at in the future. We probably wouldn't be here, but we are here, and I think there's a opportunity here as well at the moment. I think this is is trading at a reasonable multiple down here. I think it looks like a pretty exhaustive type of downtrend here as well. And what I liked last week was we saw a nice reversal there, and some pretty big volume. So on a normal week, hadn't seen that exhaustive sell off there. That would have been a big week up off the low there. So I think that's pretty constructive there. So probably an opportunity here with this one. So I've actually sort of added to this this week here, 61.55 here. I think this looks quite good here. So probably just going to sort of slowly grind up here. But it feels like the worst. Well, hopefully the worst might be over, but maybe it's not. But it does seem like an opportunity for me, which is sort of something not essentially core to the business, even though it's obviously important for trust for people who do trade on the ASX to have that chess sort of trusted, but it's not essentially it's not the most essential part of the business, Chris. It's the piece that unfortunately investors and holders sort of see and know.
So it's got a lot of the headlines and seen a few positions, people out the door. But if we move to retail, so we're looking at retail, we know investor confidence has been dropping. We're feeling the pinch of consecutive interest rate rises in Australia. That's starting to show in investor confidence, but it started showing some time ago in the share price of ADH. What's happened here, and why has ADH got your attention now?
It's kind of halved in price here, Chris. That's probably one of the reasons why it's got my attention there, and also the volume too. The last probably the last sort of 6 or 8 days there, we've seen the volumes are up here. So, the thing about the big volume is that, volumes sort of come in at, 1 or 2 places, usually highs or lows and stuff there. So, is it accumulation or is it distribution, type of characteristics? So, to me, this is, I guess you got to think about this realistically. I know, look, interest rates moving higher. Obviously, you've had a few of the retailers sort of talk about softening and sales. That is negative. Interest rates might go higher and put more pressure on that sector. No doubt about that. But the market tends to move very quickly and has priced in a lot of doom and gloom here. So at this stage there, we've almost priced in like a 40% reduction in sales and earnings here. What's probably more realistic, Chris, is what's the reality is that maybe we get a 10 or 15% decline in sales, and then maybe earnings are slightly more impacted just because we're maybe holding a bit more stock there. But it does feel like this sell-off is a bit overdone for me here. And we've just sort of seen in the past there when everyone's turned. Listen, I was busy there yesterday. I think everyone said don't buy retail, don't go near retail.
There's no one left to sell now.
Yeah, so that tells me everyone's pretty much sort of got out of it. So that's when we should start to have a look at. So look, I know it's kind of bottom picking a bit here, but the long-term investors there probably should be eyeing over some of these stocks here because they're incredibly cheap here in pricing. You might get the risk I see there is that maybe you get some of these companies updating and with some negativity there, and that's if I see anything like that, that's probably after if they've already had a big drop and then they come out update the market maybe with some slightly negative guidance there. That's probably the opportunity there to sort of jump in then. So I'll be watching that sort of closely.
So what's the thinking on that? The investors who have sold before the announcement are preempting a bad announcement and aren't sure whether they're forecasting 15, 20, 25% drop in earnings. And if they come out and say, well, we think we're going to have a 16 to 18% drop in earnings, that's the notification. Well, hang on, that's what they're expecting. 25% was too far, and that can become a buying opportunity.
I think the reality is that they don't know. I mean, everyone's been talking about the recession coming for the last 2 years, and it hasn't arrived. We've just kept spending. But at some point, we're going to stop, of course. So probably spending has sort of dried up a little bit just with that last interest rate rise. That's probably just sort of scared the market a little bit. That's probably maybe a bit of a surprise. Not a surprise to me. I think interest rates are going to go higher, but maybe a surprise to some people there. And it's the new norm as well. Like we settle in at certain levels as well. When we don't see things coming, we're not prepared for them. If once we get used to sort of something that becomes the new norm. But this might take a while to absorb that. But I just noticed if those stocks have had a really big decline, pricing in so much negativity, and then maybe that negativity does come out, that's kind of like you buy the rumor, sell the fact. So if we get that sort of bad update after the bad move, it's probably all out there. So that's probably the thing I'll be looking for there. But yeah, no doubt in my mind that some of these stocks have been crucified and are trading on some pretty, there's some PEs around 4 to 6, yields that are 9 to 12. So you got to give those a haircut. I understand that. But there's some value there. I mean, if you look at Harvey Norman's traded between 11 and 16 times. 10 and 16 for the last decade. And might be, say, the most, I think around 11 and a half times was probably the average PE for that sort of, that was the most common PE for most of the years there. So just say 11 and a half. It's trading at half of that at the moment. So again, give that a haircut, maybe 20% there. I think a lot of the forecasters are pricing in like a 20% haircut in sales and earnings here for the next sort of couple of years. That's still sitting well beyond the average price level, so doesn't mean it can't get cheaper. We know that the market's, everyone thinks the market's rational. We know it's not. Market will move into overbought or move into oversold. So can get cheaper there, but yeah, when you look at the dynamics there, we're pricing in a lot of downside. So there's an opportunity, just whether we're quite there yet or whether it's maybe slightly more to go, but I think we're kind of close here, in my opinion.
Another one you've got is Sitewinder, which is not as well known as many of the other names that we've just spoken about. First off, what did they do, and then what's in the chart that you're seeing?
Yeah, so it's in the tech space there, Chris. That's sort of like why I look at them there. So like all your bookings, sort of basically sort of software platforms there for most of your tourism operators there. So I think bookings.com and stuff sort of use Sitewinder. So a lot of people use the software platforms for to run their businesses there. So not been around that long there, but definitely in that sort of growth space there, tech space. And so yeah, it's interesting that obviously a lot of those tech stocks are doing pretty well. This one sort of has faded here, but just notice the price has started to sort of tighten up here. So this is definitely one to sort of keep an eye on there. I'd probably like to sort of see it break above a swing high here before I'd look at it, but definitely one that I'm keeping an eye on there. Just sometimes these new companies, they sort of get excited at the start, kind of fade a little bit, and then they sort of start to build here. So just a popular sort of sort of structure for new companies there all the time.
Well, to round it out with the last one, Mesoblast, this is a company that has been volatile, provided a lot of trading opportunity, but also, it can draw out a bit of a bottom, can't it?
Yeah, it's interesting. Actually, just the price action is actually looking really encouraging here, which is sort of odd because it's been a bit of it's been a laggard there. Look, it has sort of really, it's raised a ton of money, Chris. It's had to go to, but it has made a land grab for a lot of different patents in that sort of stem cell area. So they haven't just sort of focused on one area. They've sort of, they've put a flag here, flag there, so really try to do, spend a lot of money, a lot of different areas, try to sort of shore up there. So look, potentially at some stage, they might get more commercial, start making some revenues and start making some money here. But it's left a sort of bad taste in a lot of investors' mouths because they've kept going to market, raising a lot of funds here. And obviously the share price has been in a large decline. But just starting to see some signs here that, got a first high low, second high low, third high low. So it's sort of got this base building sort of characteristics sort of building here. Volume profile is actually improving as well, starting to see some volume come in on the ups there, and then volume drying up on the declines there. So even the last couple of days, it's actually popped up even higher now. It's actually gone to short-term little new high there, and it's actually some pretty decent volume there, Chris, as well. So possible change of character, so kind of constructive.
Well, there's some good charts to look at as we've seen the market turn. You're talking about the Aussie market coming from a 4-week rally, 8-week consolidation, and you have been looking for a couple of weeks now for this 8-week turning point. We seem to be there, and we've got a good list of companies to keep watching and look for trading opportunities. So we say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
But Gary's mentioned a few of the trading strategies there, 0, 1, 2, 3 bottom. There's a whole playlist of the strategies that Gary runs through on the right-hand side. And then also when he goes through charts in detail, coming from the launch pad, setting up with coils and compressions, and then moving out to become market and momentum leaders, that Friday playlist is on the right. On the left is Gary's Twitter handle if you want to follow him there.